Righty ho, everyone, and thank you for joining me. Welcome to Trading Buddies on this Monday, the 13th. Lucky Monday? Could be. We'll see. Nice to have you on board, and of course, Ash will be joining me shortly. Looking forward to catching up because it's been a fortnight since I spoke to Ash. Not sure what's going on in his world. Let's find out when he joins us in the not too distant future. Okay, let's get things underway, and we'll start by having a look at the gold chart, as always, and see if there's a breakout trade to be had here today. That's the 1 hour chart on which we seek this breakout. Hang on 2 secs. I don't see that much better. On which we seek this breakout of primarily the Asia session, which begins on the second candle of the day. And there's the high since, or the high of that range, or that session. And there is the current low, including the current bar. So what we're looking to do is break out of this area here. What we try and achieve there is a long above that high of the range, and a short below the low of the range at the very same time. So if one gets triggered, the other one gets cancelled. Now, I'm very much a stickler for not trading into support levels, and I note an untested daily pivot directly underneath us. The long's not so bad up to DR1, but the short's not so good. If I took the daily pivot away and just said daily pivot's not there, then I could probably take this trade down to here and it would look okay, down to about that level. So it wouldn't be 1-to-1, but it wouldn't be that bad either. I'm disinclined, I've got to say, to do such a thing. And for that reason, I won't be taking this trade as a breakout, because the propensity for the daily pivot to bounce an asset is quite high. Where it bounces to, of course, is something that we don't know. So we could just go into drawdown, maybe into this area here, then it takes over, and that's fine. But that doesn't give us a breakout at the open, which is really what the point of the exercise is. So let's forget gold for now. And I can't give you updates on the trades that we were in last week, but I can tell you that the reason for that is the education account on which I display the trades was a Fusion account. And the Fusion accounts have now, as best of my knowledge, all been changed over to JDR Securities, which is now what I'm on this particular education account. So apologies for that. I can't give you updates, but I can tell you that none of them lost, and some were reasonable winners, others were small winners, and a few of them were break-even trades. Now, that, of course, was if you're in the Slingshot Telegram group. If you are simply a Trading Buddies viewer, then I'm not sure how many trades I would have given you, because I haven't got the record of that anymore. It's now gone into the ether with the Fusion Market account. Righto, so let's move on. No updates. Let's move on to this week. I'll give you 2 orders that I've already placed, and then I'll go back and give you the reason for same. First is Euro versus the Swissy. Now, this is a tiger of a thing to trade historically, but at this very moment, I see the opportunity to trade this short. Why? Well, 2 reasons. I've got a game changer there 2 weeks ago. Then I've got an inside bar last week. Now, that's one of my little, I won't call it a trick scenario, but it's a setup that I use. And I call it a game changer plus, because we had a game changer bar 2 weeks ago. Inside bar constitutes the plus part, and that's what I'm looking to trade. Does it agree with the big boss? And the big boss in my world couldn't be much clearer, because we've had a very, very protracted and sustained sell-off on Euro versus the Swissy. Interestingly, we have broken through this big double bottom that was sitting there, and we've been underneath that for quite some time. You could argue that this has to change, and I would agree with that. But in the meantime, we've got a big boss who's saying the overall and overwhelming trend, certainly, and chart pattern, whatever you want to call it, is telling us that long is not probably the right direction to be trading at this moment. So I agree with that. And then when I get a game changer bar on the weekly, which is quite clear 2 weeks ago, then an inside bar, which I think is just a retracement on the reversal, then I'm looking to trade it short. Long way around saying I want to trade it short, and the entry is going to be at 0.9723. Stop loss is going to be at 0.9785, and my first take profit is going to be a 9691. Had to use my maths there for a minute. I'm only going to close a third at that point because I think there's a target area down here that I'll be targeting at 90, about 95, 0.9496. I've got it, which is 250 pips away, which would give us a decent 4-1 if you don't take the first profit, of course. Mohammed, is that considered a morning star on the daily chart on Euro Swissy? Let's have a look, see. Daily chart. I would call that probably an evening star. Monthly chart. Okay. Let me go a little bit tighter. Where have I got that? Tighter. Okay. Morning star is more like this. So you've got a low followed by a big buying bar. I don't see that. Or are you talking about this here? Yeah, I would say so. Yep. Okay. I would say so. No aficionado on that, I've got to say, but yes, I would. I think you'd probably prefer that the low of this bar was lower than that, to be fair. But I see the three candle pattern most certainly looks to me like a morning star. Here comes an aficionado into the room in a minute, and he'll confirm that or not. Look, to be fair, if it smells like one, no, I won't say that. If it quacks like a duck and it walks like a duck, it's probably a duck. So, yeah, I'd agree with you on that point. But to my way of thinking, this could well be just a short covering rally on Euro versus the Swiss. Of course, it could be a reversal. If it is a reversal, I would not like to see that confirmed by price coming back to this level here, at least this level here. So I'm a seller of Euro versus the Swissy, and I concede that it's a terrible thing to catch. But I do have a double top sitting here. What I don't have is a lower high, really, to confirm that. But there's probably a morning star sitting there on the weekly as well, Mohammed. So no problem at all. You've got the order on Euro versus the Swissy. The other one that I've chosen, I probably should preface this by going to these charts, which is the currency indexes. And the first thing I look at here, of course, is the dollar index. And Lewis, my old mate, how you doing, buddy? Good to see you in the room. This is, if I ever did not a journal, what do they call those things? A textbook on how I look at a false break, then I would take a picture of that and use it, because that's exactly what I'm looking for in the land of false breaks. Break above the resistance area, two indecisive consolidating candles, then a decisive one back underneath the trade line. Not only the trade line, it's this horizontal level here as well, then a retest of that area. That's the dollar index. If you've got the ability to trade that, the dollar index, that is, I would recommend that you consider an entry underneath that bar with your stop loss above it. I think that's quite a good setup. And in terms of dollar strength, dollar weakness, Fundamentally, I'm going to defer that to Ash. COT, I'm going to defer that to Ash, and seasonally, I'm going to defer that to Ash. But from technically, my point of view, that is a sell underneath this bar. Doesn't mean sell it now. It means sell it underneath last week's bar. So I'm bearish the dollar, if you like. Euro, this you could really take a leaf out of Robin Hood's book, I think, this week, because everything looks like an arrow to me. And when that happens, it's telling me not a lot is definitive, or I can't rely on a lot, because what I've got is resistance, support, and then a line straight through the middle of it. It makes it very, very difficult to find a direction on when that is the case. You could argue probably one of two things. One is we're currently above that horizontal level and probably headed towards the top. And of course, we've had a little bit of a turnaround there. You could call that, I think Ash would call that a failed morning star. And therefore, we've got issues here. We are at the resistance level. Are we above it? Are we below it? Great question. Are we in need of a lower high? Sorry, a higher low? Another good question. So completely indecisive on the euro. The Aussie, we've been tracking this for quite some time, the Aussie, and it looks absolutely superb from a technical point of view for me, because of this double bottom sitting here, or tweezer bottom, call it what you want, sitting on that resistance area. It's also a former resistance area here horizontally. Yes, it's struggled to get back above this level, no question, similar to what we've described on the euro, but the underlying theme here, and you've got the higher low, it's really driving me to think I can't see why this doesn't go to here. We've got arguably, again, a close above here, big rejection bar last week, big rejection bar the week before. As I say, I don't know. Technically, I do know. From the rest of it, seasonally, COT, fundamentally, I have no idea, but I would be surprised if this doesn't get here in the next week or so. Kiwi, again, we've got the arrow. We've got Robin Hood, makes it very, very difficult. The yen, forget it. Just don't want to know about the yen, too hard. The CAD, maybe we have had a higher low here. So not dissimilar to the Aussie on the CAD. I'm probably a little bit more bullish the CAD than not, and certainly more than the others. The Swissy, struggling to get back into this channel. And again, arguably, we have a horizontal level here on above which it has closed, and we're now retesting that. Or last week we retested that. So on that basis, I'm probably thinking the Swissy may well come back into this range, because we've had exactly the same as I described on the dollar index. Looks very much like a false break of that horizontal level to me. So a little bit bullish to Swissy, a little bit bullish to CAD, not to a major degree. And now let's look at the pound. Again, we've got Robin Hood in play here. We're in the middle of the arrow. You could argue again that we've closed above that horizontal level and retesting that level currently, which suggests that there probably is going to be more upside than downside. Not confident of that. Not super confident of the CAD. Not super confident of anything other than the dollar index if it does go below, as I said, where this candle is. I think we've got some downside to come. Of course, there is a fair bit of news that may, well, probably will shape the dollar this week. And Ash will probably have a look at that as well. Aussie, you could say the same, because we've got the Aussie in a very, very strong position here in my book to go long. There is, what's the data? Employment figures, I think, on maybe Thursday. Not sure about that. So I'd be looking to get into the Aussie against the dollar, which is where I was about 10 minutes ago, and trying to tell you that that's why I'm trading the Aussie versus the dollar long. And the entry, if you want to look at it, is above this bar, which of course is last week's bar. It again is an inside bar. It's not a game changer plus bar, but it is a false break indicator. Very, very similar to what you've seen on the dollar index. And I think if price were to come back to here, then we'll at least see the next resistance level. And my target area is up here around about 68.75. So that is the long story of why I'm long Aussie dollar. How you doing, Ash?
Yeah, doing all right, mate. Doing all
It
right.
seems like ages since we spoke. What's going on?
Yeah. Well, we had last week off, didn't we? Because of a bank holiday Monday.
We did indeed. Hang
And
on,
we
just
got another
turn the
one coming
volume.
as well. There's another one at the
Really?
end of this month. Yeah.
Goodness
Yeah.
me.
This is the very last Monday of this month. So the 27th is also off.
Okay, I'll book it in, don't
Yeah. Book her in.
I? I might have to go out to dinner that night. What's going on, buddy? How's the week?
Well,
How was last week? Anyway.
I'm just fascinated actually that you know your ability to pick out what's going on fundamentally from the charts, because the two currencies that you pointed to with the CAD and the Swissy are the two kind of that really they're the strongest two currencies.
Okay,
Um,
that's
when
good
it
to
comes
hear.
down, yeah, it's interesting, the chart from your kind of the way that you do the analysis is expressing that. We'll have to see whether that is something that continues over the coming months, because there's not a lot when you kind of look around. There's not a lot that would compete with those fundamentally. And the other interesting aspect is that the dollar is probably the weakest fundamentally, actually, and you've picked that as a short.
Ah,
Um,
okay.
and I've got a dollar Swiss short on at the minute, but the challenge is not really what the fundamental data is suggesting as it comes out. It's what the fundamental data is going to continue to say as it presses forward. Because this week we've got CPI data from the United States, we've got CPI data from the Eurozone, um, and that's going to shape what happens to those two currencies this week. But that doesn't mean that that's going to be the overriding move in either of those currencies. The interesting thing with it is that the Aussie's probably likely to do quite well if the dollar's CPI data does come in weak. The Aussie's likely to do quite well. Actually, fundamentally, that's not too bad, the Aussie. So that would potentially do quite well, as will everything else. But that would probably suggest a period of central banks reducing interest rates, which would be associated with growth. Now, whether that does transpire, we don't know, but that would be associated with growth. So that would probably boost the Aussie dollar. Gold is the one that I'd really like to have, but it's just too expensive. I mean, we'll look at the chart. I mean, I'll show you my chart. It doesn't really matter who's got the chart, but we'll look at the chart. But it's too pricey up here, for me. It may not end up being pricey. It might end up being as cheap as it gets. But we've had a decent run with gold. If you look at these longer term timeframes, monthly needs, to sort of like satisfy the breakout area, it needs to come back around about 10%, really, 10, 15%, just to kind of make it an attractive price. So last month's
Actually,
bar, it's,
while you're on that chart, sorry to
yeah,
interrupt. Um, it's amazing, when I look at your charts, I see different things than what I see in my own charts. What
yeah.
I see there, and I'd like you to measure it, the measured move of that breakout looks very much like it's hit its limit.
Let's have a look.
I
Yeah,
wouldn't even go
back.
there. But yeah, there you go.
I mean that's the measured move from a Feb.
Yep.
161.8 extension. I mean, if you sort of like actually measure the move from top to, you probably go there, would you?
Yeah, that's what I was thinking. Yeah.
Okay, let's have a look. From
Maybe a
there.
bit left. Yeah, it looks pretty close, doesn't it?
Yeah, I mean, we're looking at a monthly chart here, and that's a relatively worrying looking bar, this one here, for the bulls. So that would suggest some retracement, but it's just that the the way that things are kind of going, and at some point, and we've been talking about it for years, but timing this thing is going to be practically impossible. Um, the way that things are going and the way that globe is going, the dollar dominance is getting eaten away, and it's getting eaten away. I suppose sparked off by the Ukrainian conflict, because as the U.S. government decides to take away some of the holdings of US treasuries from Russia, it makes other countries like China pretty spooked. And they sort of think, well, any kind of possible energy of the United States, enemy of the United States is, could have their holdings taken back, sort of, put under lock and key and taken out of the hands of the holder. And of course, they've done that to Russia, and that will worry, the likes of China and other countries. And of course, they need US treasuries because they do trade in US dollars. Now, as they look at that particular situation and they think, well, actually, we're not going to have US treasuries because they could decide to confiscate our US treasuries. What do they go and buy to do global trade? Well, gold is the obvious option. I mean, that's just one reason. You'd kind of look at gold and suggest that it's probably the correct asset to own. You couple that with the fact that the data tells you that the central banks have been buying gold hand over fist over the last few years, and it points to
that, by the way.
Yeah. They're still
Yep.
taking up quite a lot of gold, and this particular conflict, with Russia and Ukraine, really Russia and the West is extending, longer than I think most people hoped, and we don't know how long this is going to go on for. But as it goes on, it creates tension, and I think the tension and the worry is different this time around because you've really got Russia is not the superpower that it was in the 70s, of course, but you've got China that is, and could potentially exceed the United States as the world's largest economy in the next 10 years. So there's a definite, the battle lines have been drawn, and then you worry about the United States dollar, and we're going to live through it at some point. The collapse of the United States, the collapse of the West. Not maybe collapse is a little bit strong, but certainly the demise to a degree of the West looks like it is starting. It looks like those cogs are turning, and gold is the obvious thing to own. Precious metals will be the obvious thing to own.
That for quite some time now.
Yeah, absolutely, mate. Well, the thing is, regardless of the conflict, you can't get your country trillions of dollars in debt, and then you go around all the nations of the kind of Western world. The United Kingdom, I think that GDP, debt to GDP, something like 96%. So it's near 100% on all of these things. But actually, the United States is over 100% debt to GDP. So you can't put your nation in that much debt, and at some point, suggest that that's not going to come back and bite you. You cannot print your way out of this stuff because, and I've heard the arguments before. Well, they can just wipe off all the debt. They own the debt effectively, so they wipe off all the debt. Well, that's just simply not true. There are
at all.
No,
debt means you owe it to somebody.
You owe it to somebody, and the way that I think most people sort of like think is that the Federal Reserve buy government debt. They print money, they buy government debt. So at any point they can wipe out that debt because they're the owners of the debt and they're sort of like within the country. Well, that's not true because what's happened in the United Kingdom is they've the central bank, the Bank of England, have bought the government debt, but rather than allowing that government debt to expire, they've sold that debt into the market. And the people that own that market are people like hedge funds, the pension funds. So it's not just between the government and the central bank. There are other players in this. They're not going to say, okay, fine, just wipe away the debt and effectively bankrupt our business. So that's the city. A lot of the city own a lot of government debt. That's the point. And the Chinese own a lot of government debt in the United States because these are what treasury bonds effectively are. So you can't just wipe that debt away. This debt needs to be satisfied at some point. Now, the fact that you're trillions of dollars in debt and continuing to spend is hugely problematic because at what point does that house of cards fall? We just don't know. And that obviously kind of promotes gold. So looking into the future, and we don't know how far into the future, and in some respects, it doesn't matter because it doesn't matter whether it's in our future, whether it's in, somebody in their 60s future, 50s future, 40s future. At some point, either our or our children will pay for it. So you've got to protect your pot, your holding in the world, and gold seems to be the best option to do that. Now we're talking about trading charts here. So trading charts are a lot faster, and you know we're talking about a behemoth of a problem here. So it's not to suggest that we should be buying gold here and don't look back, because we don't know when the house of cards is going to fall. And the likelihood is, looking at charts historically, these things do come back and test a level. Now, whether it's this level or this level is uncertain, but it does suggest it's something's going to give to come back. But as the current data is unfolding, it's not giving us a reason to suggest that it's coming back in the next month or so. No, because the United States. So recently, what we've had in the US, University of Michigan consumer sentiment. That's sort of like a decent place to start. That's at 67.4 from 77.9. Now, when you sort of like consider the mean average of around about 80, 85, the 67 is very, very low. Now we're talking about consumer sentiment. So we're talking about something which ultimately will manifest. Not ultimately, I shouldn't say, potentially could manifest. Now these things can change, of course, very quickly, but that potentially could manifest into the future. So the sentiment index is weak. We're looking at ISM PMI data, which all of a sudden, I mean, the manufacturing data has been pretty horrific for quite some time. Yeah, it's not been, well, I'd say horrific's maybe over egging the pudding, but it's been
not just in the States, though, it must be said.
Well, do you know what? The States have actually held up the best when it comes down to the manufacturing sector. But they've now gone into contraction on the last print at the start of this month. Yep. Services sector have also gone into contraction at 49.4. So the one area that they were kind of looking at for growth has now slipped very, very slightly into contraction. We had jobs data at 175, I think it was, the NFP, 175,000 last a week or so ago. Now, the average of that is around about 230. So we're looking at 50,000 plus less jobs created. So there are cracks forming. Now, these aren't splitting, but there are cracks forming, which are suggesting that finally, after having this huge boom going on, really, comparatively to the rest of the Western world, the United States is now sort of starting to show that there is some weakness stepping in. I think GDP came in at 175, and that was at 3.3. So there was a big drop in GDP as well. So the numbers are starting to point to weakness in the United States. And it had to happen. You can't have sort of everybody, including China, showing negative data for a period of time without eventually it kind of like seeping into the United States picture. Yeah, and we've had it for a year and a half or at least a year, where the United States just hasn't shown any sign of reneging on its, giving up that growth, those growth numbers, where everybody else has been, in pretty much negative territory for quite some time, except for Canada doing pretty well, except for Switzerland doing pretty well. But the difficult thing when you're looking at Canadian dollar, and this is why the Canadian dollar is a difficult buy, and the Swiss is a difficult buy, because the Canadian economy is performing one of the better, but inflation is dropping to a more comfortable level for them to reduce interest rates, and they may well be able to do it before everybody else. And we know that they're coming
off a higher rate than most, though, aren't they?
They are coming. Well, this is the point, I suppose. But they are coming off a higher rate. But if they lower interest rates first, that is not strength for the Canadian dollar. So we can buy the CAD on the economic data, but then recognize that actually the inflation picture is actually more comfortable. So they could lower interest rates, and if they do, that's gonna sell off the Canadian dollar potentially. So we can't just trade the economic picture, because the economic picture is strong. So you'd think, okay, buy Canadian dollar, but hold on, their central bank might be in a position where they could lower interest rates. Now that the spread differential on its own suggests that so that weakness could step in.
No wonder I don't think fundamentals is my world.
Well, do you know what I mean? I have to say, when I looked at the fundamental picture this week particularly, it was very, very cloudy. And it made the picture very, very difficult, because there's nothing really standout sell. The United States, of course, is weakening a bit, but it's not out and out bearish. It's just kind of stepped into some weakness, and whether that continues is yet to be seen. We'll see what happens with it. But there are a few things pointing at it, and then you've got the United Kingdom, which also was looking pretty bleak, and then they post GDP numbers which that whacked 3 years, sort of 2.5 years better growth than we've seen for that period. So the United Kingdom's kind of surprised to the upside. I think that CPI data from the United States this week will be fascinating, and if that does show what the data is pointing to, which is weakness in the United States economy. Unemployment data went from 3.8 to 3.9%, so not much, but they've been waiting for the labor market to show signs of weakness, and it is starting to show signs of weakness. So does that then filter through to the CPI and the inflation picture? Because if it does, that inflation number is going to come in weak. Everybody's looking for the Fed to reduce interest rates, which, by the way, they shouldn't. But they're looking for them to reduce interest rates. And if the CPI creeps down sufficiently, that will be the bet in the market. I would say almost undoubtedly, which also puts gold at a very difficult position to sell. You think, well, actually, inflation coming down, weakening the dollar, gold goes up again. So the whole thing's very, very difficult. You've got fundamental picture, which is really imbalanced. You've got the COT data, which is saying, as an example, the dollar yen is another fascinating one, because the Japanese, the Bank of Japan cannot handle the price of the yen up here. And they've told us they can't handle it because they've already intervened twice. And this is the result of their intervention. This, and we're back here again. So the result of the intervention is pretty much zero.
They come unusual in that, is it? That's very much typical when they do intervene.
Well, it is, but does this now come down to them sitting back and saying, okay, well, let's hope for some weakness in inflation in the other nations, so we can actually now step back and not intervene. But what they are telling us at these levels is that they cannot afford for the yen to go any lower. Whether they succeed is obviously a question of the trade, but they can't afford it, because they've come in at these levels at 160, and they've said, okay, we're just going to buy loads of yen, and it had a little jitter in the market. And then they went a few days later, we'll buy some more. It had this little jitter in the market, but it hasn't had any follow through. So what's going to cause the follow through? And it's going to be one of two things: more intervention, or other nations kind of seeing their data weaken sufficiently while the yen have intervened and raised interest rates a little bit as well. So the yen, I think,
I'm wrong on this, but they timed that to coincide with both of the statements, the Fed statement and NFP. Am I
right? 3rd of May, I think this one was. The 1st of May. NFP's the last Friday. Pretty much, yeah, pretty much. But to be honest, mate, there's so much data, you could pretty much kind of coincide it with something important.
Well, I thought that was relevant in that, and you'd have to look at the exact timing, but I figured that they actually were doing that intervention not as a result, but in confluence with the Fed statement, and possibly in confluence with,
well, do you know, mate,
job numbers.
I think that's probably fair. I think the most significant thing is the level. The level of cost to the Japanese consumer at this point, because remember, obviously, as the Japanese yen weakens in price, that means that imports are going to get more expensive, and of course they've been after this inflation picture for so long.
But they're net exporters, aren't they? Really?
They are net exporters. Yes, that's absolutely true. Well, we say they're net exporters. Historically, yes. But actually,
I'm not sure what's going on these days. That's true.
Well,
because everyone else has taken their products.
Yeah, I mean, if you look at
and copied them, right?
Yeah, quite possibly. But if you look at the last sort of few prints of trade, the trade balance in Japan, it is well and truly net negative.
Oh,
so
okay.
Yeah, well and true. I mean, I've got the numbers here. The last one was 366 billion x, trade balance in favor. But the prior one was minus 379. So that blanks the other one out. And then you've got the previous one to that back in February this year, negative 1,758 billion. So, that's a pretty big number when
That's
you look at sort
substantial.
of,
Yep.
yeah, I mean, that's a huge swing to being net negative. So, yeah, I mean, I guess there is the potential lack of competition, but that is not favourable to the numbers in Japan. I mean, their CPI data, their inflation data is still under 3%, so it may not seem on the face of it to be all that concerning, but they jumped from zero. They jumped from nothing to 2.4%, 2.5% inflation, and it could jump further if they don't intervene. They've got problems at this particular level, and they've got obviously debts to pay. They've also got dollar holdings that they are, treasuries and things like that. So the price of the yen here does not seem comfortable for the Bank of Japan, and I think that's quite interesting, and that's something to watch out for. And it does put the yen on the buy list. It's a very difficult currency to buy, but it does put it on the buy list. CPI
Might just
data.
place a trade.
What's that, sorry, me?
I might just place a trade.
Oh yeah, go.
Okay. Euro dollar, guys. We're going to short euro dollar.
I can't seem to stop share, but
Sorry, I think I've got it. You good?
I think this might crash down, so I'll hop out and come straight back in. Doesn't like me, this Zoom.
Okay, it's not sharing my screen for some reason. I don't know why.
Probably because mine's gone weird. Okay, I'll be right back.
It's still loading. All right, mate. Okay. Let me just talk you through this whilst the screen is trying to share. I don't know why it's not. There it is now, by the looks of things. So what we've got here is a consolidation, obviously, but we've also got an untested daily pivot. Oh, no, we haven't. It's a weekly pivot. I'm sorry. I've got the wrong bloody pivot. Okay, it doesn't change anything. What it does do is tell me that we've got a double cross virtually on the daily pivot, and we're going to head towards the weekly pivot. I might just measure this though, because it's not as good. Wow. No, it's not as good as I thought it was. Hold everything, guys. Sorry, because I've got this new broker, I'm completely at sea as far as my colors are concerned. I might have to change this around. I thought that was the daily pivot and that was the weekly pivot, but it is the reverse of that. That said, I would like you to consume what I'm about to tell you. And it's imperfect, but I'm still going to consider it. The problem I've got now is the candle's too bloody small. We'll still take the trade. It'll be a 1-to-1. So just go it as something like reduced risk here. We will go with, and I apologize, I had the wrong pivot. We'll go with an entry below this bar here, which will be at 10768. So go, it's something like 0.5% okay. 1.0768, I think it was. Stop loss. Well, look, I think you can actually put it above here, just to get it a bit tighter. That's only 3 pips. Goodness me, small candles. Let's go above here. 1.0779. And we'll get rid of take profit pips. We'll go with a TP1 at the no TP1. We'll get rid of TP1. What a target, don't we? Target there. Take profit. I hate using pips. I'd much rather use the level. The level is going to be the weekly pivot. I think I can actually do that, Carl.
We'll put the level in it as the weekly pivot.
WP. Can I put that in there?
Let's have a look. Seems to want it in pips.
Doesn't seem to have a target. Anyway, you guys know what it is. It doesn't look like it's accepted the order, actually. Maybe that's why. Let me try again. Oh, there we go. Stop loss 11 pips. That's fine. It hasn't given me the take profit, which is less than 1-to-1, but that's where it is. That's the trade anyway, guys, if you want to follow it. If we get a close above this stop level, I'll probably cancel the order anyway. So just bear that in mind. Right, that's me.
Well done.
Sorry, mate, interrupted you.
No problem, mate. It's I mean, the long and the short of it, there's not a lot of clear data. I tell you what, though, hot data is really interesting on the yen as well. That's the other thing I was going to say. You know, massive selling from the speculators, which means massive buying from the commercials, when the speculators are heavy sellers, then there's nobody left, on that side of it. And on the juxtaposition of that is that when the commercials are heavy buyers, and the commercials, they're the guys that are hedging. They're not sort of like trying to kind of pick points necessarily. They're basically saying the risk here is to the downside. The risk to our company is to the downside for dollar yen, or whatever it is, or if you like, the risk to our company is for yen upside. So they are heavily buying the yen. That doesn't mean they've got a fundamental reason to do it. It just means that the balance of payments, if you like, the maths just what it's going to hurt them. It's going to hurt them. It's hurting them at these levels. And we're talking about extremes. We're not talking about a little bit of buying here and there. We're talking about extreme levels, levels not seen for 5 years. So the chance of the yen having a really elevated run is high. And seasonality is difficult. It's sticky. We are in a really sticky period for most currencies, actually, sort of like when we look at the seasonal charts. But the fundamentals are maybe just starting to see some cracks in other countries. Fundamentals for Japan aren't particularly good either, but it's just that the price point for the yen
it's been too high.
Yeah, it's too high. And so basically, if the price point for the yen is for the yen is too low, effectively, think about it that way around, the price point for the yen is too low, and the COT data is basically saying to you that businesses, so that it's too low for the government, it's too low for the country, and businesses are basically saying it's too low for us as well. That does suggest a big run in the yen. But it's just a cost, isn't it? The cost of trying to trade the yen is brutal.
Oh yes, to the downside certainly.
Yeah.
Upside's fine. There's the chart.
There we go. Yeah, that's the best way to look at it.
That's the yen index, right?
That's the yen index, yeah. And how far out can you go, time wise?
Yeah, fair way. Wow, that's too far.
No, sort of. I mean, that takes us back to 2007.
Which is potentially when they started recording this, right?
I guess so, mate. But you look at that. We're looking at 20 years of the value of the yen, and it's not been this low. We can say with confidence here that it's not been this low for 17 years. So where
does the month chart go back to? Has to be the same, surely. Yeah.
Yeah.
So let's
Yeah.
go with
I
three.
mean, I don't know if you look at the dollar yen, it might be you might get sort of slightly different data. You might get a historical prices that go back a lot further.
Probably. Okay.
Yeah, that's better, isn't it?
Oh, you went back into, geez, how old was I then?
Yeah, but look at that, man. I mean, if you know,
I was
if you look
15.
at that, you look at where the price is now on the dollar yen. Haven't we just hit a double bottom from the 1995 lows?
Nowhere near it.
Oh no, we're nowhere near it. Yeah, okay, okay.
Nowhere near it. But you're looking at dollar yen, right? So
Yes,
you'd be looking at highs, not lows.
you're right. Yeah, we were looking at the highs. Yeah, actually, it doesn't
But
look too ugly there. I mean, we
wow,
are
look
at
at that.
yeah.
Wow.
Well, I mean, it
It's,
changes the look of it then, doesn't it?
it
Actually makes it
certainly
look
does.
cheap.
We're range bound.
Yeah, yeah, we are though. I mean, that is one thing you could say. That it's range bound. Lewis is just sort of saying about the swaps. Yeah, you're right. You're right,
Yeah, it's too
Lewis.
heavy.
Yeah, the swaps on the end are way too heavy. But you know, if it comes down, that the swaps won't matter. But you know, if it
I
comes
had to
down,
close Euro Swiss with that. Was it Euro Swiss? I think it was Euro Swiss. I was short Euro Swiss
yeah,
and in the money, but I was losing money.
yeah,
So I just had to close the trade.
yeah, it makes things difficult, doesn't it? Um,
Mm.
but anyway, mate, I think it's going to be form this week. We'll see GDP from the Eurozone Wednesday and CPI from the Eurozone Friday, and of course CPI from the United States as well this week. So those two are probably in focus, I would suspect. But I think it could be a tricky week, so be careful. I think for the traders in the room.
Well, this is a far, far more interesting chart than I had anticipated. And I've got to go back to a certain person who will remain nameless, but has the initials Julian McCree,
Yeah.
who said, I think around about 3 or 4 months ago, which would be, I don't know, down here somewhere probably, that dollar yen is way, way, way undervalued. Now I see why.
Mm,
Look at
mm,
that.
yeah.
So this level is absolutely crucial.
Yeah. Yes, you're absolutely right. Yeah. Well, it
Interesting.
is. Yeah, it is. If you look back to 1989 and you know really what's been going on
There was an
with the
earthquake
dollar
in
yen.
Newcastle in 1989.
Was that an earthquake in Newcastle?
The Newcastle, Australian Newcastle, yes.
Oh yeah.
Um, Not that it had anything to do with dollar yen, I've got to say, but like that had never happened before. Yeah, deaths and all that sort of stuff. Wow, this
Mm,
is an interesting chart
mm.
to say the least.
I mean, that does
I,
suggest a pullback. If you look at that
yeah, we're right
inverted
now.
head and shoulders, I mean that's what I'm seeing. You know,
Yeah,
from
yeah,
1999, left shoulder, head down at 2011, and then the
yeah. I'll
right shoulder.
squeeze it up
Yeah,
for you a little bit, guys, so you can see
yeah.
that. Where's my little brush thing?
Actually, there's
If
two
I
of them.
can,
Well,
there's
actually,
some.
yeah. I mean, I can see something slightly different. The first curve I would have put are the next dips.
Here,
No, no, no. Those ones there. Yeah. There's one there, and now if you draw, so there's an inverted head and shoulders there, and then there's another one there, which looks like it might well have broken through. Now I wonder whether that inverted head and shoulders has now played out. You know, from
well,
the
it's all over.
neckline.
You can probably make a cup and handle in there as well.
Yeah, you probably could. You probably could. I mean, it's
Wow.
bullish, but it's got to take out this level, isn't it? I mean, it certainly looks like
Yeah,
180
crucial.
is a potential target.
Yeah, that level is very, very, very easy to see. but exactly where it is questionable. Is it there? Oh, I hate this bloody thing for that reason. Is it there? Or is it there?
Well, yeah, I mean, I'd plump for the higher one. Yeah, I'd plump for that one because it looks like there's a little bit of scruffy price action near the left-hand side as well. You know, and price getting rejected here. But you know, I think with the commercials so concerned when we look at the COT data, I think that this particular area is going to be fought over. This is probably going to be the one, and you know, as we know, timing it is going to be tricky, but it does point to downside. And we are looking,
yes.
you know, and the thing is, the Fed, everybody's putting pressure on the Fed to lower interest rates, you know, 3 times this year. Firstly, I don't see how they can. And secondly, I don't see how it can be good for the US economy to lower interest rates before they kind of get inflation back to 2% for a sustained period. You know, it's almost kind of, it sounds like platitudes, you know, with them even discussing it at these levels. We're double, you know, if you think about where we came from, you think about the United Kingdom, 11% inflation at one point, nearly 12% inflation at one point, and now we're down to around about the 3.5%, 4% mark. So if you consider the drop, it seems massive. But if you forget the high point and say well, the target's 2 and we're at 4, you double your target. So how can you even discuss it? How can you even, you know, start to discuss it? I think every time that any central banker comes out and says it's heading in the right direction, the market gets excited to suggest that they're going to lower interest rates. But if you were if you were around that board, you wouldn't. That wouldn't be your. I don't think it would be anybody's preference to lower interest rates at this particular stage. As much as it's hurting, and as much as they may have got it wrong to this point, you can't continue to get it wrong and lower those interest rates just yet because inflation's sticking around. It's really stubborn. Now, if you look at oil,
it's so entrenched, and you know that when I look at it, it's not illogical to think, okay, now I understand why, and it's because, in my opinion, that we've had, where are we, 4 years now, where the first 2 years of that 4-year period was COVID. Businesses hurt like hell. Supply chains dried up. And those that survived were hurting.
Yeah.
2 years on from that, and inflation's taken off. Suddenly, those businesses, if you like, supermarkets, for instance, here in Australia, are under extreme pressure. They're actually having inquiries into price gouging by supermarkets.
Right.
But the prices went up and wages didn't go up to match that.
Yeah.
Right? Cost of living went up. Everything went up. But now nothing's coming back down.
Yeah.
Because, in my opinion, the people who suffered through COVID, the businesses who suffered through COVID are going, well, here's our opportunity to get some cash back in the bank. Whether that's right, wrong, or indifferent, it's logical to me that that's the case, and that's why, from my point of view, there's no chance of inflation going away anytime soon.
Well, I suppose the fact that the prices won't come down to pre-COVID levels is kind of a different thing, because if you can kind of consider what the prices are today, if they didn't put the prices up any more than they are today, and next year we kind of get the inflation print, that means that there's been no inflation. So prices won't come down, but prices continuing to kind of push up, you know, at kind of 4% is I think where the slowdown will potentially come from, because you know we got oil. You see WTI is coming off. relatively substantially. It's weakening sort of like quite nicely, and that's been one of the drivers. So we've had supply chains, we've had the price of oil, and energy costs as one of the some of the drivers for inflation, and those costs are coming down. So even though we might not get inflation, will still be there, but the fact that it will be 4% plus looks like that's less likely. That's slimmer. That's slimmer than it was. So if they can get that at kind of 2% growth in prices going up, then they'll be happy with that. But it's still going to take a while before that happens. And I guess the problem, of course, as things normalize, the problems have also arisen because, as we know, the supply had got shrunk during COVID, but the demand was still there. So all that pent up demand came in, and everybody was buying and buying and buying. Governments gave workers money to go and a lot of money to go and. Well, I mean, they kind of gave them enough money to live. I mean, it's you see, there's a big sort of movement. The furlough argument's become quite difficult in this country because, they were given some workers were given 14 to 20,000 pounds or whatever to go and spend, but they weren't getting paid. So all they were really doing was paying for the stuff they were paying for before, and that went straight to the supermarkets, really, and for food, for the essentials, which ultimately goes straight to the shareholders. So the workers have done no better out of furlough. They're worse off, if anything. But the point is now that demand sort of like drove prices higher because they were allowed to continue that demand to still be there. If they had
it was a false economy.
It was a false economy. If they said, look, we're not going to give you any money at all, we're just going to break the economy for a bit, then it probably would have bounced back relatively quickly. Because it would have found its place. It would have been painful, but all we've got now is like almost like death by 1,000 cuts, and I just don't know how long it lasts. But as I say, mate, when I hear people sort of saying, oh well, we're going to get 3 rate cuts this year and everything else, I think about it and think, but firstly, why would you want that? Because that's just going to push the problem down. And secondly, they would be mad to give us that, 3 rate cuts. They'd be mad. That'd be even worse if they sort of start if they bring interest rates down too early. That's just going to prolong the problem.
Yeah, they're not going to do that, are they?
Well, you'd hope not, mate. You'd hope not. But pressure from governments. You got votes coming. You got elections coming this year. You'd hope not. But they've been pretty stupid to this point. In many decisions. So you wouldn't put it past them.
Yeah, they're pretty good at it. Getting things wrong. That's true. And we have to bail them out, of course. We poor taxpayers have to go.
Yeah, exactly.
Okay,
exactly.
Here we go again. But anyway, how do we trade out of this? How do we get out of the doldrums and into something that makes us money?
Well, the doldrums and into something that makes money, it does point to gold. But we are in a difficult position because we I don't know how we're gonna jump on the gold chart from here.
Well, you know how fascinating I am with charts, and gold is a really good conveyance with charts, I believe. And right now, it's showing me a double top and a potential lower high.
Yeah. Technically, it looks all right, doesn't it?
For a sell, yeah.
For a sell, but the other one is oil, of course. Selling oil is another possible. If we're going to get some weakness in global economies, which if the United States, yeah, you have done.
Yeah, but I had to get out. Well, I didn't have to get out. Why was I trading this? I think I traded this little bar here. Might be wrong. But I got all this move, but then I had my stop loss was here somewhere. And
okay.
Just before that game changer bar on Friday.
Yeah. It looks good though, doesn't it? For some more downside.
Well, lovely game changer bar there on Friday.
Yeah.
No question.
Yeah.
What did the weekly say? No game changer bar there. Nice little bang, bang, bang sitting there though. How low can it go, Ash?
I
Try
mean,
to
I
ride
would,
on that now.
yeah, the 70 level looks pretty attractive.
70.
Yeah, that looks
That's not
attractive as a you know as a possible kind of first stop. That looks pretty attractive round those lows again.
okay. We can make money out of that. I'd
But
like
we
to
got
see
a little head and shoulders
buying
there,
day
mate, as
today.
well. You see the head and shoulders there?
Yeah, there.
You know, so that's a neckline at around the 70. So we break
Hmm.
through there, then we're probably looking at 65.
Yeah, okay. Reason that that could happen?
Well, I think if we are sort of seeing some weakness globally, and if we're seeing it from the United States, then everybody else is going to catch some of that as well. And if China also remain relatively weak, so if the weakness does come in globally, then the demand I think for goods and services will be reduced, which will drive inflation down, and it will also drive down the transport costs of goods, which means that because there'll be a lack of demand for oil. Um, we are coming into driving season, which is going to be interesting. But if it doesn't really kind of flourish from this particular point, then there's a chance that we've always got conflict as the caveat to all this stuff. But we don't know when and if that will flare up or not. So taking that out of the equation, I think there's enough to suggest that there might well be some global weakness that could drive the price of oil lower.
Driving season. Are you talking about European holidays? You're not talking about live golf or anything, right?
No. Driving season in the United States, where they like to kind of cruise around a bit.
Oh, okay. I'll be doing that in August. As a matter of
Yeah,
fact.
well, when we got that, so that's going to be August. Yeah, that's coming up to August. Actually, oil. Looking at WTI, 1st of July through to around about the middle of August is a low for it hits a seasonal short for oil. Um, that's still 2 months away, so we're kind of in a bit of a we're in a little bit of a flat period now.
I'll
I
be
don't think
away two
driving.
two six, mate, or back in 2 6.
No worries. I don't think driving season is until sort of August. So we got a while, but it looks like it's in a bit of a it looks like it's in a bit of a range bound period for a period. Gary, the European summer, yeah, yeah. I mean all this kind of thing. Because you're talking about sort of like travel and travel abroad as well, so airlines and things like that. But if there is global weakness, then oil will be one of the ways that we will see that coming into play, and we're definitely seeing some weakness step in. I think there was a little inventory drawdown last week, which saw a little bit of buying coming back in for oil, but I think generally speaking, the demand has just not been there, so we may well see some further downside on it. If we look at and this is I think this is a challenge. I think we've got a genuine challenge with trading at this particular moment because we've got could Lewis saying that he believes the inventory for driving season already starting to build up. Yeah, you'd think so actually. You'd think so. I don't know about the timing of that stuff. But the challenges we've got is that the Australian dollar and the Kiwi dollar particularly are associated with growth. Central banks reducing interest rates will probably promote growth, but central banks promoting an interest rate reduction may well come from a lack of growth, and that's why we kind of see some concern in the world. That pushes us towards the yen as well, which is tricky, and the yen's expensive. The Swissy as well, Swiss National Bank lowered interest rates, one of the first to go, and they look it appears to be a currency that we could maybe buy because of global weakness kind of coming into play. So there's lots of kind of, I guess, juxtapositions kind of going on really with the currency market and with the global economy. But I don't particularly like this phase. I'm staying out of the way of trouble so far this week, mate, until maybe until that CPI data comes out.
Yeah, cool. Lewis, it's great to have you back in the room, mate. Giving me all these ideas, and even better when you agree with me.
Yeah.
Did you want to come on camera, mate, or you want to share those thoughts, or are you happy for me to read them out? Great to see you back, mate.
FTSE's rocking as well. I mean, that's another kind of another thing that we've got going on. Nasdaq is kind of a potential resistance point as well, which I also think is quite interesting.
Sorry, mate. Just your thoughts on gold and oil. I think that's really interesting, the oil part in particular, because I'd not considered that as a high probability, but I can see today it's looking okay. If you want to, mate. Okay. Lewis is going to come in and have a chat with us in just a tick. I've got a couple more I was thinking about this week too, Ash.
Yeah.
And guess what one? No. Yeah. Okay. Go on. Guess what one?
One of them is one of the other things that you're thinking about this week.
I'll give you a hint. It's on the screen.
No, I was going to say CAD Swiss. I thought it might be the CAD Swiss.
Yeah.
Yeah, it's a tricky one, the CAD Swiss, actually.
Well, I think this will be confirmation of what I have in my head. And sometimes I know that's a little bit furry what I have in my head, but we've got, don't know about a reversal, but that'll do me as a rough inverted head and shoulders. So I've got my reversal tick. Then I've got a higher low tick. Now I've got a slingshot candle pattern that suggests there'll be a breakout if price goes back above last week's. Yeah, no, week before's bar. So yeah, I'm interested in that. Probably not at that price because it's pretty risky against the major trend, if you like.
Yeah.
But something in here that'll get me profit before I hit that level might be very, very interesting.
So, I'll tell you what I see is the December 26th, I think it is, December 26th low. I've got a trend line coming up from the December 26th low. What chart are you on there? Oh, if you go to the daily.
Yep. I've got this all around. December 26th down here somewhere.
Yeah.
Hang on, it's got to go a bit wider.
Yeah, those
so
lows.
We're down here.
Yeah, you could go to the next point actually. But yeah, if you go, let me just make sure it is that. It's the December the 29th actually maybe I've got a slightly different chart to you. Yeah, so right at the bottom of that area.
That one?
It'll probably do. It wasn't that one actually, but it'll probably do. But yeah, look there. That I get the same look from that. So that's the trend line I've got, which puts price under it.
It does. With a reversal bar off the monthly pivot.
Yeah, yeah.
Oh, you scared me now.
Yeah.
But that's not the point. The point is, if that's right, then happy days. But if they're wrong, then they're going in the opposite direction, right?
Yeah, I mean, I think when you kind of come out like that on the weekly, it does suggest that there could be one more dip to give us a kind of cleaner inverted head and shoulders, down from the well, it looks like they, yeah, exactly.
Okay,
Yeah, that
I'm
would
still
be
poised. I'm still ready to trade it if it does set up.
Yeah, I mean, it would be a good one because of the positive swaps as well. I wouldn't be too far behind you, I think, if it sets up.
Lewis, how you doing, buddy? Oh, I might have to let you talk.
Hello. How are you, everybody? Hi. I'm good.
How's everything with you, mate?
Well, has been busy for quite a while. So this couple of days, have a bit of time to come online to chat with you guys.
Oh, brilliant, mate.
Yeah.
What are you going to share with us?
I tried to come in on Thursday. I didn't aware that you have cancelled the Thursday show already.
Yeah, it's now a Monday only thing. We're too busy, mate. Just too busy.
Yeah.
Good to be busy. Good
Yeah.
to be busy and make money.
Yeah, well, yeah, those two things
Actually,
are quite.
I'd rather be doing this and trading than what I have been doing, mate, to be
Yeah.
honest. But, you know,
Right.
you have to do what's in front of you.
You
True.
do
Yeah,
indeed.
right. Correct. Well, I hardly trade currency nowadays. I think
Ooh,
for about
okay.
maybe more than a year, I have not traded currency very actively. Maybe one pair in a month. But
Yep.
I mainly focus in gold and oil nowadays. Yeah.
I think that's good, mate. I
Yeah.
like that. I like you know if you're kind of like picking an area to specialize in, then the gold and oil market really tell you a lot about the rest of the world anyway, and it can tell you a lot about the currency. So I think that's a really good shout.
Yes, because I do a lot of day trading right now, so actually gold and oil give a lot more opportunities than
Interesting.
yeah, and I'm doing on a shorter time frame, which I use the 4 hours to as reference, and I use even the 15 minutes for entry.
Mm.
Wow.
Yeah, so that
Well,
just give a little bit more greater potential gain. The risk and reward ratio is slightly much better than on a 4 hour or on a daily chart.
Yeah.
so today, where are we today? Today, where are we this minute?
Right. I'm actually long for, let me see. I'm actually long in oil, short gold, and
Okay,
I just pick up a long for Bitcoin.
Okay.
Ooh,
Yeah. Let me start with okay, I don't have my chart on this computers, so I can't share the screen, but just very quickly go through with you guys.
okay.
Let's talk about oil first, yeah.
Which
Why
one?
I long oil, WTI.
Oil? I've only
Yeah,
got XTI.
WTI, yes. Why I long WTI? I long it this morning actually. So whereby this morning there is a very nice reversal on the resistance. So I took a long from here, and then now I have this observation, and I actually heard this
So
long
what chart do you want to look at, mate?
WTI.
No, which time frame?
Or
I haven't got WTI.
under the fusions is called the XTI USD.
Yep, that's what I've got.
Yeah,
What time frame?
H1.
Okay, that's where we are.
Yes.
So
great.
you've got a bullish engulfing bar. That's what you're trading?
Yes, that is correct. This is a very nice. You see a resistance. There's a kind of resistance over here. So I just took, sorry, support level over at around the area. So I just took yes, beautiful. So I just took a long trade over here, and I hear somewhere couple of maybe 2 or 3 or even 4 years back that somebody shared that oil always like the DP, the daily pivot. So imagine my target is to trade up to the daily pivot at around 78, 90 area.
Yep, 78, 84. I've got it on.
Yep,
XTI.
that is the target for my long. If price go there, I already have my probably 2 to 1.
Nice
work, mate.
Beautiful.
Yeah,
guys.
yes.
If you wanted to test that theory that Lewis has just shared with us, really easy to do. Just go to a 4-hour chart and see how many times out of how many the daily pivot is tested on oil. And tell you what's also a pretty cool thing to do. If it's tested early in the morning, see if it comes back to it. So time of day is also very important when you're looking at daily pivot tests.
Yes,
sorry,
correct.
mate. Just that
Yep.
I didn't interrupt.
Yep. So I actually took that trade, and I set two take profit level, one at the DP, and another one up at the top of the highest peak here, the highest point here over here. Yes, that's correct. Slightly lower.
Yeah.
Slightly lower. I learned this from From our guru, that always take don't be greedy, put your target a few bit before the resistance level. That's correct.
You got it, buddy.
Yeah.
That's right.
So Lewis,
So-
do you trade this purely on on the technicals, or do you have fundamental kind of bias on oil and gold? Is there any fundamental reason you'd be
Okay.
looking to buy?
I look at the fundamental. For the time being, it's pretty quiet. You know, nothing disturb the oil market. So that actually bring me back to the technical.
Yep.
Only when there's, somebody said something or someone fire some missile, all these things, then I will go
Yeah.
back into the fundamental.
Yeah, gotcha.
Yeah. So this is the oil trade that I took. So first target DP, second target top of the at the peak of the the last trading day, the high of
That'd be a
last
nice
trading
result,
day.
mate.
Yep.
33. Nice. 6-1.
Yep.
Very close.
Yep.
Brilliant. What about
yes.
gold?
Okay. Let me see what's my goal. Let me take a look. Yeah.
Hourly chart
My
again?
goal, hourly chart. Yes, I only trade hourly. I hardly do daily nowadays, frankly. I look at the 4-hourly. and I put in as I said, I see the chart on 4-hourly. Sometimes take daily as reference, and then after that I entry either 15 minutes or M30 30-minute chart. All right, for gold, I actually took a trade last week.
Okay.
Actually last Friday. Which one?
Chart.
Right, last Friday. Yes, this.
That would be
I took
Friday.
on the second one. Yes.
This one?
No, I took on before the three green candle. This is the one. This is the one. That's right. I took on this one.
Game changer bar on the hourly. Interesting.
Yes. I took on this one, and then it almost took me out of the trade, and then this morning it came all the way down.
Yeah, you had to change your nappy, right?
Yeah, almost take me out, So there's, but anyway, there's a high risk to take. So this is a very small trade.
Nice.
That's good work,
It's a very small trade. Yeah.
There's the better one, right?
That's actually a better one, but it is in the middle of the night, so didn't manage to get it there. I'm sleeping unless I'm awake watching some football matches, then probably I may get it. But too bad it's a Friday night.
Yeah, 100%. I'm not looking then, but that's gorgeous.
Yeah, that's right.
After a rally, if you get a reversal bar, a game changer bar after a rally, it's really powerful. But the problem with that is, with me, it's going way against the trend.
This is a counter trend trade actually. Actually, this the bar that you mentioned actually is a much better trade to take because it's a lower high.
Lower high. Yep.
Yeah, it's a lower high, so much better trade. But anyway, still sitting on a pretty good profit. Only things I'm only doing at 0.1.
All good, mate. Well done. Thank you for sharing. We better get out of here. It's way past my
I think time's limited already. Yeah.
Great to see you, buddy.
Great to be back in the show.
Yeah, good to have you back, Lou. We'll see you next week then, mate.
Don't turn up on Thursday, mate.
Yeah.
No, don't turn up Thursday. I think we've got one more Monday. Is it one more Monday? Yeah, one more Monday, then the next Monday off, and then we'll have a clear run for a little while.
Right. Okay. Good.
Thank you, Lewis.
So, yeah,
I better go back. I'll just go
back. Thanks for having me here.
Thanks, Lewis. We'll see you next week.
Chat with you all again. Yeah.
Happy days.
Same to you. Right. Happy day, happy profits.
You bet.
Too right.
Nothing to do on euro dollar right now. But if we do get a close above this stop loss level, as I said, on the 30-minute chart, just cancel the order. Also, if there are 6 candles expire, so 3 hours from when we placed from this candle, if that occurs and we haven't been entered, also cancel the order. But at this point in time, just hold. I don't think I've been triggered. Did I give you the Aussie dollar entry? I'm not sure I did.
Not sure.
If I didn't, I'm entering at 0.6645. Stop loss is at 0.6555. Is that right? Yeah, that's right. My maths is correct. I'm going to take my first profit at 0.6700. And I'm going to remove half of the trade at that point. Target is here at 68.75-ish. If you're interested in following that one, simply trading a false break of not only the trade line, but also this support level here. That's what the trade is. I do like that little pullback bar as well. That's handy. Mate, I don't think it's easy to find good reasons to take trades at the moment.
Yeah,
except that I'm bearish the dollar.
Yeah, with you on that.
And that goes for everything again. It's pretty much, except the yen. I'm not willing to trade the yen yet. Just not. Simple as that.
Yeah, we'll see. We'll see what happens. Yeah, you too, mate. You too. We'll see what happens with the yen this week. See if inflation data changes it, or see if they step in again. I mean, we're really watching for the BOJ. They don't like to intervene, but let's see if they do it again and give it another pump.
Third strike may be coming. We'll see.
Yeah.
Hey guys, thanks so much for being our trading buddies this week. We'll do it all again next week. There's no holiday next week, I don't think. So we will be there. Lewis, thanks, buddy, for checking in. Great to see you. And
thanks,
we'll catch you all next week. Have a great week. Bye-bye for now. See you.
Bye, guys.